What's happening? What's happening? What's happening, everybody? How y'all doing? How y'all doing? How y'all doing? Y'all go ahead and drop something in the chat while I got the pleasantries out of the way. While I get the pleasantries out of the way, so I can say what's up to y'all in just 1 minute. And what's happening? This is the overnight price action. I got the wrong date on there. Let me get the date right. Today is the 12th. This is the overnight fraction for 8/12/22. 8/12/22. Yes, and for those that's pulling up for the first time who don't know who I am, I jollipies because I ain't looking at you right now. I'm just trying to get myself together, but I'm back at it. For those pulling up for the first time, or for anybody who don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day doing Tim's Tidbits. I get on once in the morning before the market open, and I get on once in the evening after the market close. It's football season, so the time is a little off for the evening. I usually do it at 9 a.m. Eastern Standard Time, at 6:30 p.m. Eastern Standard Time, but it's football season, and the Spider Gang voted saying, hey, let's do it at 7:30 instead of 5. So we're doing it at 7:30 until football season is over. We won't be doing a show tonight because they got a first scrimmage game today, so I'm be at the first scrimmage game. But I'm supposed to be telling you who I am and what I do. See, I ramble like that sometimes. I get on Al Gore's internet and I share my thoughts about the stock market, share my thoughts and particularly about the ES because I swing trade the spot, give my thoughts on what the ES, the NQ, and the Dow doing to try to look for trading opportunities, swing trading and day trading opportunities for the SPY or the ES futures or the MES futures, right? So that's what I do. I do it for the free 99. I do not charge for it. I don't want to charge for it. I don't ever want to charge for it. So all I ask you to do is press the like button. It's on one side of your screen. I don't know where it is. My mama said it on net. It's on that side for her. When I look at my streams, it's on this side right here for me. Like when I'm looking at my stream and I'm pointing like this right here, it's like I'm pointing at the like button. But my mama said it's on that side of the screen right there. That's the opposite side when I look at my YouTube videos, right? But press the like button and press the share button. Share it with one cousin you like and one cousin you don't like, so we can come together and build a new country together, man. Let's get into it, man. I ain't gonna hold y'all up today. I know y'all be like, Tim, we ain't talked about price action in forever. All we've been talking about is all this economic stuff. We ain't looked at the price action because the price action ain't really been doing much. It's just been consolidating, pop, consolidate, pop, consolidate, drop, consolidate, drop. Ain't been much to talk about. So I just been talking about all the stuff that be in the mind of little Timmy Rogers, man. Let's see who in the chat, man. Y'all put something in the chat so I can see who shot you out, man. I see more numbers than I see comments. So I'm just going to shout out who I see, then we're going to get into it. What's up, old Rich? What's going on, Dominique? Cool it now. You better cool it now. What's up? What's up here to learn and share? What's going on, Sonia? Sonia? What's going on, Valdez? Angela, District Attorney Valdez in the building. What's going on, Valdez? Michelle Tucker. What's going on, Michelle Tucker? Michelle Tucker in the building, y'all. What's going on, Michael? What's going on, T. Baker? What's going on, Pamela Jones? Anthony. What's going on, Anthony? What's up, Cal? What up? What up? Hey, Cal sipping on something with a gar in his hand. Got him a Cuban. Got him some what it is? Look like some Henny and a Cuban. He got him some Henny and a Cuban. What's going on, Thomas? What's happening? What's happening, everybody? Hey, we gonna get right into it today. Ain't nothing popping today economic wise besides consumer sentiment at 10 o'clock, I believe. Let me check that real quick. I think the only thing going on economic wise is consumer sentiment today. Yes, consumer sentiment at 10 o'clock. Yeah, that's the only thing popping off today. Not much. Light Friday. Let's get right into it, man. Let's go over here and check out our girl. Spyleen, where you at, baby? Here I go. There goes Spyleen. What's up, Spyleen, baby? Spyleen looking like she about to give us a slight gap up. She looking like she about to give us a slight gap up. Now, drum roll, please. Today is Friday. Y'all know I was gonna say something special, but I ain't saying that special. Today's just Friday, man. Today, Friday. We've had a monster week already. If you made money this week, don't force nothing. Just go ahead and chill out. If you made your money this week, don't force nothing. Just chill out, right? The rubber band is extremely stretched right now. The rubber band is extremely stretched. Now, even though the rubber band is extremely stretched, right? Don't force any shorts. Let me say it again. Do not force any shorts. If you see a short setup for a day trade and it's your setup, hey, albeit take it, but do not force any shorts. Let the market show you that it is ready to reverse, right? Do not fight the trend. Do not fight the trend. I know it's extended. I'm getting really like leery of this, if that's the word I want to use, of this bull run right now. It's been good. It's been great, but we need to cool off. So do not, at this point in time, be trying to jump into any call swings or trying to jump into any put swings. Do not. Do not. And the reason why I'm saying that is, right? Look at where we at, right? We've had a nice run up. We holding nice above this weekly breaking structure at, I said I was going to get better at saying the levels. I told y'all I was going to get better at saying the levels. We have a weekly breaking structure at that 417.44, right? We had a weekly breaking structure at the 417.44. On August the 8th, we got up to 417.62. When I said we poked our head up, remember I told you let me do it for you. We were down here like this right here, then we went boop, and popped our head back down. We poked our head up right there on the 8th. Then we had a nice little pullback. I was loving that. I was loving that pullback. Got the good CPI numbers. We gapped up. Beautiful gap up on the good CPI numbers, right? And we held above that weekly breaking structure strong. Got the good PPI numbers. Got another gap up. And we retraced and filled that gap, right? We retraced and we gapped up and then we filled that gap, right? The reason why I say don't fight it is because, look over here. Let's go back. Y'all know I like to go back. Let's go back. Let's go way back in time. Let's go back, right? When we was over here consolidating, waiting on the CPI, the PPI numbers, right? We was over here consolidating, waiting on the CPI and PPI numbers. Over here, bad numbers came out, right? This was the job numbers. Like the bad job numbers tanked us. We then waiting on the CPI numbers. We gapped down on bad CPI numbers, right? Over here, good CPI numbers. We gapped up, right? See it? See the comparison? Over here, bad PPI numbers. We gapped down. Over here, good PPI numbers. We gapped up. But this time, we filled the gap. Over here, we gapped down. We didn't fill the gap until after we made a low and retraced back, right? But after we gapped down, right, we had this day, it was a little retrace day coming back. And we had another retrace day going up, looking like we're going to turn around. Oh, nope, we kept going down, right? So that's why I say, don't. And we was real extended right here. After we got down here, we was real extended, right? And everybody and their mama, including me, oh, man, we way extended. We got the bounce from here. Fake you out, come here. See what I'm saying? So don't get caught over here with the fake you out, come here. Let the market show you what it's going to do. The market will extend a whole lot farther than you think it will. Just to prove a point. It's a whole lot of people that's getting burnt all to Hades and back because they were saying this bull rally ain't real. I'm hanging on to my shorts. Imagine anybody that started shorting over here after these waiting on these CPI numbers, and they started shorting right here. Look how smoked and crispy charcoal they are right now. And imagine if they still in their conviction saying this ain't real, right? Somebody over there like, okay, this ain't real. I'm gonna prove a point to you, my boy. I'm gonna push it all the way up here before I turn around, my boy. Do not fight it. This ain't the time to get into no new swings to the long side or the short side. This right here was the time. This was my key point of wanting to get into the swings. I missed it. Right there, I missed it. That was the entry for me for the swings. I got into some more calls right over here, and I got out immediately the next day because we was in this consolidation, right? Right there. I didn't put on no trade here because that's when I was like, this is when discipline hurts, because I had an idea that the numbers were going to be good and we would skyrocket, but I had no confirmation. So I had to wait. When the numbers came out, we skyrocketed and just sat there. We skyrocketed and just sat there. We didn't do anything with the good news. We skyrocketed and we sat there. Right? Why? This little Timmy Rogers talking, because we are so extended. You see what I'm saying? We super extended right now. So we gapped up and just sat there. You know what I'm saying? The market acting like it want to cool off. We gapped up again and just came down some. Is this people taking profit? Is this some people saying, man, this real extended. Let me take some of this profit. I don't know. I don't have a freaking crystal ball. But all I want to say is look at the price action, pay attention to the price action, and be like, okay, let's see what the market give me today. If you haven't made any money, sure, let's look for a day trade. But if you made money, sit the day out. If you missed this, if you missed this, this was we had two opportunities. I don't count this as an opportunity because I wasn't putting no nothing in front of CPI. That was a gamble for me. So I'm counting two opportunities during this leg right here for the way I trade to get in. I missed one, I took the other one, right? If you didn't take any trades during this time right here, hey, buddy, you missed it. You missed the run. Just the market give you another opportunity. Don't chase anything right now. Don't jump in early with no puts right now, right? Can you shoot and take a gamble and it just tank today or tomorrow or Monday? Yeah, sure. But we're not gamblers. We're traders. We trade, right? Let's look at the EMAs. Again, this is why I say don't gamble. We are so close to this 200 moving average on the daily ES. We are so close, right? For all the EMA traders out there, they know once you retake the 20 is the green line, the 50 is the blue line, the 200 is the yellow line. The EMA traders, once they take the 20, their next target is the 50. If they reclaim the 50 like we did here, we took it, came up, tested it, took off. When they reclaim that 50 like that and take off, their next target, their target for taking profit is this 200. Look how close we are to that 200. Look how close. It's more likely to come back and maybe fill this fair value gap, maybe test this weekly breaking structure and then hit that 200 than it is. It's more probable, should I say, to hit that 200 before coming back and hitting this 50. It's more probable to hit that 200 than coming back to hitting this 50, right? So keep that in mind. Don't go ham on no puts until the market show you, hey, I'm ready to go down. Now, me personally, what I would be looking for before I start trying to say, okay, I'm ready to take some puts. This is my trading style. This is my trading style. I'm steady at it. I'm slow and steady, right? If we come down and get us a breaking structure at 410.22, If we come down and get us a breaking structure at 410.22, right, then I will be looking for to try to get some puts on a retrace back up on a price leg on this side over here, right? Let's say we came down and we got us a breaking structure below 410.22, right? So I will be looking for a retrace back up to get in somewhere on this. Like, I'll be looking for an entry on a price leg right here. Y'all know how I look for entries. We have a breaking structure come back. It could be right here at this breaker right here. If we broke through that right there, that'll be my breaker that I'm looking at. Because y'all know how I look at the breakers from like the way I learned from ICT. We came up right here, we ran, boom, we got the liquidity above this right here. So this, when I come back down, I'll be looking at that spot right there. Because we came down, we had a low here, we came up, ran above it, broke the liquidity, came through, broke below right there, broke below that low. So I'll be looking at this area right here to go short once it retraced back. That's what I would be looking for. But I would need me a breaking structure with a closure below 410. What did I say that was? 410, whatever that was. 410.20. What was that right there? 410.22. I would need a closure below that before little Timmy Rogers start looking for trying to get any kind of puts, swinging any kind of puts to the downside. Day trade puts if you want to. I don't care. But this market can be more, what's the term they've been using? It can be more it can make sense, not make sense longer than you got money. I can't remember the term they be using. The market cannot make sense longer than you got money. All right. So don't fight the trend. That's all I'm saying. We about to do a gap up. The market opening in less than 15 minutes. It is looking like we're about to gap up. So if we get us a gap and go, we still got the potential to hit this weekly target that I had. Again, we already hit it on the Q. The Qs, we hit that weekly target on the Qs, and we started retracing off of it, and I took profit on my wife's position because I'm like, I don't know if we're gonna go back down. You know what I'm saying? I don't know what it's gonna do, but it hit the weekly target that I had for the Qs and for the SPY. The Qs hit it. When it hit it, I went in and put a stop loss in. I said, if it turn around here, I'm getting you out of the position. If it keep going, hey, I'll just adjust the stop loss, right? Have a plan. That's all I'm saying. Have a plan and don't fight the trend. Let the market show you what it's going to do first. Again, if you have made money this week, don't trade today. Don't give none of your money back. Let's look at what the overnight price action was. Let's look at the three indices first to see if there's any divergence going on. All right, everybody seemed to be looking at the close line. The white line is where everybody closed yesterday. ES, NQ, YM. For anybody who don't know how I have my chart set up, the white line is the close. The white horizontal line is the close for each indice, right? So overnight, everybody pretty much was in tandem. Everybody just hung around their New York close. The NQ seemed to have a little more relative strength during the Asian and Sydney, because the YM and the ES dipped a little bit lower than they closed than the NQ did. The NQ held a little bit stronger during the Asian and the Sydney sessions. After midnight, everybody was moving pretty much in tandem. They pretty much moved just like each other, because looking at relative to where they went to from yesterday's price action, everybody the NQ was a little bit weaker relative. The Dow had the most relative strength, but the Dow and the ES was about the same, because I'm looking at these candles from yesterday, like from yesterday, how they was moving. I'm looking at the lows and the highs from yesterday. So looking at London's high on all three indices, the ES was pretty much in line with London's high. The NQ was way below London's high, and the Dow was above London's high. That's what I was looking at. When I be looking at like relative strength, I be looking at relative to how it played out yesterday. And for anybody who don't know what I'm looking at, let me draw a line. So if you come from London High on the ES to London High on the ES, boom. That's your slant of your line or angle or whatever you want to call it. London High on the NQ from yesterday to London High on the NQ today. That's your line. Then London High on the Dow from yesterday to London High on the Dow today. That's your line. So Dow was like the relative strength leader during the London, from London to London. And the NQ was lagging behind relative strength wise from like what it did yesterday. That's what I was looking at when I say I'm looking to see who leading and not. So the Dow and the ES are ahead of the NQ relative strength wise. And in the last, everybody pretty much about the same. The NQ in this hour that we're working on right now, the NQ is leading for this hour, but overall the Dow is still a little bit ahead of it. The NQ is leading this hour because the NQ is up above its London's high, but the Dow and the ES have not made it back to its London's high. So right now this morning, the NQ is showing more relative strength because they've made a new overnight high. But in relations to overnight, the Dow was leading overnight as far as relative strength. That's what I'm looking at. Hopefully I ain't confused nobody with that right there, but I just want to break that down and share with what little Timmy Rogers be seeing in his mind. It's not, I forgot to put the link in the chat. My bad, y'all. The link in the chat. If anybody want to pull up and ask a question, the link is in the chat. My bad. I'm sorry about that. Overnight, what did the ES do overnight? This is that 4-hour fair value gap that we had got into yesterday before reversing. Once we reversed, we came back. That's yesterday. All right, so overnight, we hung out right around the high from 810, which was Wednesday. We hung around right around Wednesday's high. We dipped down and kissed that we kind of dipped under that 530 high. Remember the other day when we were stuck in between that 530 high and that 6-3 or 6-2 June high? I can't remember the dates, but we were stuck in between those two over here, and then we broke through it and went up. It was either the bottom side or the top side. I can't remember. I think it was the bottom side, but we were stuck in between. Anyway, we came back to that 530 high again, and then we just hovered around the high from Wednesday, right? Wednesday's high. And then we start to push up. This fair value gap right here in between 42, 27, 75 and 42, 14, 25. It was an hourly fair value gap in that range. It failed. It didn't do its job because it was an hourly fair value gap right at the breaking structure. The breaking structure was at 42, 21, 75. So it was an hourly fair value gap right in line with that breaking structure. It blew through it. The breaking structure in the fair value gap didn't hold its job, didn't do its job, and didn't hold it down. So the Bulls won out overnight. Boom, bust through it with some authority. Now that they done bust through it with authority, now they are defending that area pretty well. You know what I'm saying? They still trying to push up pretty well. They're defending this area well. So if this area holds up, like we came back, there was a fair value gap from 42, 22.50 up to 42, 29.75. Went into that fair value gap, dipped below it a little bit, came back and got a closure above it and started to push up. Still has not made a new overnight high. They still have not made a new overnight high. The overnight high is still intact at 42, 37, 25. Let me go ahead and mark that. We still have not made a new overnight high yet. So it's still intact. But on the NQ has made a new overnight high. So keep that in mind. The NQ has made a new overnight high. So if the NQ is showing, if the NQ is leading to the upside, It's just waiting on the Dow and the ES to play catch up because the NQ has made a new overnight high. Let me change this to red. Again, don't force no trades. Don't force anything. Let the market show you what it's going to do. It's Friday. It's been a good week. You've had a good run. It's been some good price action. If you didn't get a chance to participate, so be it. Live to trade another day. Live to trade another day. Just enjoy the fact that you were able to see some moves and you was able to identify it, and you was able to, you know what I'm saying, know what was going to happen before it happened. And when it played out according to your thesis, just live in that. Be like, oh man, this stuff makes sense. I can see it. Sell side liquid, buy side liquidity is right there at the overnight high at 42.37.25. Sell side liquidity that I'll be watching is at the overnight low at 42.19, 42.19.50. Sell side liquidity I'll be watching is at the overnight low at 42.19.50. Right. I don't even have my midnight mark. I ain't got nothing marked out. I apologize for that, y'all. Sometimes I don't be coming back here. Hey, I be taking a brain break. I be like, forget these charts, punk. I be taking a brain break. I be looking at these charts so much. I be like, man, I get that together tomorrow. Spider Gang, understand. Let's set this 12 o'clock. Oh, that midnight open. That midnight open was at 42.16.50. 42.16.50 for the midnight open. Acting like they want to try to maybe sneak out a little push. We working on a fair value gap. This candle ain't over yet, so I won't really mark it. I'll show you what I'm talking about. This candle ain't done yet, but it looked like we trying to form a fair value gap right there. I ain't marking it yet because that candle ain't finished cooking yet on the hourly. The London open was 42.21.25 for the London. For the London open. Yeah, that candle ain't done cooking yet, but we looking, like I said, we blast through this fair value gap over here, the one that I called out that we had made yesterday. I already said the numbers. I can't remember what it is off my head, but we blast through it and got a closure above it. Stayed on top of it for a while, retraced back down, and filled in the fair value gap here it's in between the fair value gap in between 42.22.50 and 42.29.75. Refilled that fair value gap, got down below the London and set well, we didn't make a new overnight low, but we set the overnight low is way back here. The overnight low is actually below the midnight open. The overnight low is below the midnight open at 42.14.75. Right. They've dropped down to a 15-minute. Oh, the market about to open in 1 minute. If anybody got to go trade, I appreciate you for hanging out with the boy. Make sure you hit the like button. Oh, why is that off? How did I get that off? That's off. Yeah, 42. Well, wasn't that, I got the right number on there, but why wasn't it on the line? I'm tripping. I got the right. I guess I just didn't. I might have bumped it. I don't know. I might have bumped it. I don't know. Market is open. The market is open. Let's see what we do. Let's see what we do. Still haven't touched that overnight high yet. Let's see. We dipped into that 15-minute right there. We came back. testing this breaking structure right there, that 15-minute fair value gap. We came back to that, but we didn't fill it all the way in. Let's see how this play out. Anybody got anything? What y'all? Let me see what's in the chat, man. I ain't looked at the chat all day. Sell side liquidity is the same on the 15-minute as the 60. Nothing changed as far as that. We do got one swing low right here. That's above that. But if I'm looking for liquidity, this is the one that I would be targeting. If it's looking for, if liquidity to the downside would be the target, I wouldn't target that. That's not the bottom of the price leg. That's, you know, something else. Let me see what y'all talk about. Why the white line gotta be. I'm not fooling with you. What y'all talking about here, man? What up? What up? What up? Let everything burn today. Shout out Mark Trading with a Dummy, man. Y'all need to tap into his YouTube channel when he start making good videos again. Don't nobody want to hear you talk, man. What's up, King Rail? Always force against the trend, love lose. Yes, we know you the what you call it? The king? No, not the king of trade. What's the name of your character, man? It ain't the king of trading. It's the I can't think of it right now, man. I can't think of it right now. Stocks rise Friday as S&P heads for fourth. I can't see the rest of that thing. What's up, Kashaya? What's going on, man? Bob's your uncle. For anybody who don't know why I always say that whenever I say Kashaya, because Kashaya is one of our Canadian cousins. And I heard a Canadian say Bob's your uncle one time. And I'm like, and then I heard another Canadian say Bob's your uncle. They say it like at the end of a sentence, like it's like a stamp of confirmation. You know what I'm saying? It's like it's some kind of that's the way I take it. Like, you know what I'm saying? You know what I'm saying? Bob's your uncle. Hey, have a good day. You know what I'm saying? Like Bob's your uncle. Morning. What y'all got going on over here? What's up, Ryan? Insolvent. And that's the word they be using. Insolvent. That's the word they be using when they be like, what's the name? You were trying to say the market can stay irrational. That's it. That's it. The markets can stay irrational longer than you can stay solvent. I appreciate you, Ryan. That's the term that they be using. The big boys use those terms right there. The market can stay irrational longer than you can stay solvent. Like when I was saying the market cannot make sense or do stupid stuff longer than you got money, the market can stay irrational longer than you can stay solvent. You will run out of money trying to rationalize what the market is doing. Yes, thank you, Thomas. Thank you, Ryan, for y'all tapping in with that. Because I want it to be. The bias is bonds look easier to read than the index today. Oh, really? I ain't even looked at the bonds. This the 30-year. This the ZB right here. I ain't even looked at the bonds today. I ain't looked at the bonds in about 2 weeks. I ain't gonna hold you. I ain't looked at the bonds in a minute. I ain't looked at the bonds in a minute. I ain't gonna look at it now. I ain't looked at the bonds in a minute. Oh, this is what I was telling y'all about yesterday when I was testing out the breakers for doing it like the way I learned it from ICT. When I was like, once I find it from the way I learned it from ICT, then I can go back and make it make sense with the high low, higher high, lower low, all that stuff that Shout out PDub and Lex. It was dope. Shout out the video that they put to it was dope. It, you know what I'm saying? It makes sense. If you can see it like that, hey, more power to you because it makes sense. But it's just easier for me to look at it. And as you, I never got to the 15-minute. I was talking about the big box was the 60-minute, right? And then I was saying I was gonna show y'all how it repeated on the 15-minute because I marked it out on the 15-minute too. And why did my lines disappear? Oh, it say loading. It's oh, you know what? I might have too much data loaded. Oh no, I don't. I only got 15 days. I only got 15 days. Why is it taking so long to load? How many days I got loaded over here? We pushing. Are we gonna come to this sell side first? We pushing. Or are we just coming down here to bounce back up? We pushing. Heading toward the London. We heading toward London. Pushing. I'm pushing. Okay. It wick back up though. Let's see how this play out. We just went past that swing low right there, but we wicking back up. Let's drop lower and see something. Oh, I'm supposed to be looking at this right here. See, I got caught up again. Okay, there we go. Boom, we loaded up now. It was the same thing that played out. I ain't far enough back on the 15-minute. See, the same thing played out on the 15-minute time frame, right? This was like the big box was the 60-minute, and then this box right here, this green candle right there, that was my 15-minute. That was the what's the name? So you can look at it one or two ways, right? I looked at it using this candle right here because that was the last one before we started going down. You know, some people might want to say, hey, this is a beefier candle, so I want to use this one. This was the last up close candle, last beefy one before it really dropped. I just went with this one right here. That's the way I see it. It's all in the same range, so it may be close enough for government work, but I went with this one because that was the last one on the up because we started dropping there. That's when we started dropping. So that's why I went with that one. But that's the high, you know what I'm saying? Like I was saying before, we came up, boom, ran highs, ran liquidity over there. So I was watching this high, right? Once we came down, right, and then broke liquidity after this right here. Once we came down, that's why I got my eyes on this high, right? We came down, ran liquidity below it. Now I'm waiting for the market to trade back up to that. Come back up to it. I'm watching that right there. And as you see, when the market, I watch it coming up to it, right? You could have took a trade off of it there. Boom. Could have took a trade off of it there if you wanted to, if you was bearish. But then once it get back to the other side, I'm looking for it to support it on the top side. So you can trade it to the short side, and then you can trade it once it go past it to retrade it to the top side. That's like what ICT like to call that's real support and resistance. So you got resistance here. Then when you get above it, you got support there. You know what I'm saying? Support and resistance. He called that real support and resistance. I don't know what to call it. I just call it, that's how I look for my breakers. And once I find it, right, now I can go backwards. You know what I'm saying? I can go backwards and be like 4, 3, 2, 1. You see what I'm saying? Like low, high, lower, low, higher, high. And now I can go back and say 4, 3, 2, 1. But before, you know what I'm saying? Like I identified it over here already before. So if I just wait for the highs and lows to form, like which high do I use this low? Do I use this low? Do I use this low? Do I use this low here? No, that's before it. Do I use this low? Like what low do I use? What low and high? Do I go 1, 2, 3, 4? No, 4. You know what I'm saying? Which one do I use? And if I use the low, high, then I miss this short trade off of this breaker over here. You know what I'm saying? And then I don't know. What if I pick the wrong high, the wrong low? It's just easier for me to wait. You know what I'm saying? Let it run liquidity and watch the candle up here. Okay, I'm gonna wait for it. Boom. Once we get that and we get some strong distribution and break and hit some liquidity down there, now I'm watching that as a potential breaker. Boom. The market come back up to it. I'm looking to maybe go short off of it if it align with my bias. If it align with my bias, hey, I feel like we finna go short, turn around, boom, it's at my breaker. Let's take a short off of it. You know what I'm saying? Right? Once we bust through that breaker, now if it align with my bias, I'm looking to go long off of it. Hey, let's go long off of it. Boop, go long off of it. You know what I'm saying? And then we fought with it a little bit right there, came back through. Now that we done fought with it and gone long there, now I can move that out the way and start looking for other stuff. You know what I'm saying? I can start looking for, because I done used it as resistance. I done used it as support. Now we done went through. Now I can start looking for other stuff now. And now it's out of the picture. But that's, I said I was going to break that down on the 15-minute too, and I didn't break it down on the 15-minute yesterday. So that's why I went back to that. Let's go back and see what's going on. Pushing. We didn't go for the sell side. We came down and finished up this fair value gap here. Let's drop lower and see exactly what we got to. Pushing. Right there. Came right there to that order block right there. We came down to that order block right there. Is that wick for wick? The open on that order block is 42.25.25. The low on that candle right there is 42.25.25. Wick for wick came down to this order block right here. For anybody who don't understand what the order block is, we coming up. We got a slight little incline right there. It ain't real big. It ain't real heavy. We got a temporary shift in sentiment right there with these two down close candles right there. Right when we trade back through that area, we got a fair value gap right here. Once the shift in sentiment, trade back through it, we got a fair value gap right there, rendering this right here a potential order block. These down close candles right here. This the beefier one of the two. So that would be the one I have my eyes on. And boom, it came down to the open, wick for wick. Bam, hit the open, turned around and took off. That's where it stopped at. That's why I say let's drop lower to see if we can see where it went to. You know what I'm saying? You always want to go down and see what the market reacting to. And that's what it reacted to right there. That order block right there. If I was an order block trader, I probably would have had that marked out and probably would have been. I don't trade order blocks. So that wasn't my trade. Just want to share that. It's a million ways to skin a cat. You got to be, this is where discipline come to play. You got to be okay with missing trades. That's not your trade. What, Tim? If you can see it, why you don't take it? I'm glad you asked that question, little Timmy Rogers. I don't take it because that's not a part. That's not my plan. The worst thing you can do is, as a trader, is to do something that's not in your plan, goes against your strategy, breaks your rule, and it works out for you. If you go against your rules and it works out for you, that's cementing in a little bad habit, and that bad habit will start to fester. A little leavening the whole lump. How I know I probably messed that up, but that's in the Bible. Go look it up. Hey, let me see what y'all talking about in the chat. How long I been on here? 43 minutes. Ain't nobody got nothing. Ain't nobody got no questions or nothing like that. If y'all don't, I'm about to peel and go get me something to eat. Do you know the code? Lex and PDub keep posting. Man, I don't know what I asked. I said, man, who y'all supposed to be? Mark and Jolene with these old cryptic texts? I text both of them. Lex texts me back laughing. She texts me back laughing. PDub ain't hit me back. I think PDub is PDub on vacation. I don't know. But I text both of them. I was like, man, what's up with these old cryptic texts y'all keep? I mean, these cryptic posts. Keep putting that mess up. Get off my timeline. I text Pete up. I say, you post one more cryptic post, I'm blocking you. a milli block on any. What's up, milli block? Hey, that's it, man. That's all I got. That's all I got to share today, man. Oh, let me mark my New York Open real quick. Let me mark my New York Open. 9:35. What time this candle opened up? 42.31 even. Uh-oh, the Bulls might be trying to do something today, man. I said I wouldn't mind if they was just like a inside day. Just, you know, do a little chop suey. I don't mind a little chop suey today. And then let me share with y'all why I be saying I don't mind us doing some chop suey, right? Look at it like this right here with the EMAs, right? If the market, right, continues to blast up, look at the turtle head. Remember when I was talking about the 20 period? Man, Millie, what you still doing on my screen? Get off my screen, Millie. Get out of here. Hey, them just jokes. Hey, remember when I was talking about how the 20 period had started poking his head up like a turtle? He was doing like this right here. You know what I'm saying? The faster it goes up or down, the more steep that moving average get, right? It gets steeper and steeper. But if we do a little chop suey for a while, the EMAs start to catch up without it having to be a drastic pullback. You know what I'm saying? Like if we consolidate for, let's say if we consolidate it for like 4 or 5 days, like over here, how we consolidated for 1, 2, 3, 4, 5. Hold on. 1, 2, 3, 4, 5, 6, 7 days. We consolidated for 7 days right here. Look how the EMA started to catch up with the price. You see what I'm saying? The EMA was dropping. And then when we started consolidating right here, it started to catch up to the price. See how it's like it started to catch up to the price. And so if we will start consolidating, these EMAs will start to catch up. That EMA will start to catch up. You see what I'm saying? Everything will line out and it won't have to be such a drastic move up or down. That's why I'd be like, let's go ahead and cool off and consolidate. Like, you don't always got to rip back lower to cool off. You know what I'm saying? Just consolidate and cool off and let the EMAs and the SMAs catch up to the price. Let the price catch up with you. That's why I be saying, you know what I'm saying? Hey, I just want this to be like an inside day. I just want to consolidate. I don't want to move. And the way it's trading right now, it don't look like they're going to try to blast off and get all the way up here to that, to my target. Like I say, it hit there on the Qs. The Qs was leading this week. The Qs did its thing. The Qs got to the target and quickly backed off. You know what I'm saying? Since the Qs got up there and quickly back off, I really don't see the SPY trying to get up there today. You know what I'm saying? Because the Qs rejected off of it pretty hard. You see what I'm saying? So that may either be a next week thing, get up to it, and then maybe retrace back. You know what I'm saying? Or get up to it, boom, retrace back to here, and then keep pushing. You never know. The bulls might be, hey, what's the term? The market can stay irrational longer than you can stay solvent. I think that's what it was. I know what it was, cuz. Where's that, cuz? Where you at? Right there. The market can stay irrational longer than you can stay solvent. Remember that. Always remember that. If we ain't got nothing else, man, I'm gonna go ahead and get out of here and get me something to eat. See, we're pushing back down again. We went up there, hit that buy side liquidity. Looking like it might be just a chop suey day. Might be a chop suey day, but then again, we could drop it like it's hot. We went up there, got that buy side liquidity, and then now boom, look at them. I left for less than 5 minutes because we got 1 minute to go on this candle, right? We was pushing on that green candle, left less than 5 minutes, and look at that how we done turned back around and came back to the same spot where we was at when I was talking about we hit that fair value gap. Look at that. Might just be a chop suey day. Let's just let it be a chop suey day. Don't give your money back to the market, man. I'm not gonna be on tonight. I'm gonna be at my son game. I appreciate y'all. Yes, news at 10 o'clock. We got consumer sentiment at 10 o'clock. I mean, is it consumer sentiment? Is it consumer sentiment? Let me check that. I don't be wanting to say the wrong thing because people quick to call you out. Quick to call you out. They must don't know. I be kicking people off my live. Consumer sentiment at 10 o'clock. Shout out the people that be looking at the what's name. I was looking at a video last night and I was like, man, I ain't seen that in a minute. The because I never look at this right here, but they the greed and fear index. on CNN, this right here. Look at that. We inching toward y'all can't see that. We inching toward greed. Again. let me put the comment back up there. Where the cuz at? Where the cuz at? The market can stay irrational longer than you can stay solvent. look how we inching toward greed, man. We inching toward greed. This rubber band, look at the rubber band, man. The rubber band is extended, it's stretched out. Let me get this lipstick off the charts. Look at this, man. From here, from the lower the consolidation period up to where we at now. 14% up. Man, the rubber band, if that ain't stretched out, little duck, man, that's stretched out. But look at this right here. We showed inching toward that greed, boy. We start when we was back here, when we was back down over here, man, we was in like extreme fear of fear. I want to say we was like over here somewhere. When I was looking at people who pulled this up, isn't the way to go back and look at this in history? Okay, let's see. That's July 14th, and that's June 17th, right? So June 17th, that's May. June 17th was extreme fear of 14 on June 17th. So right here at the low, it was extreme fear. It was 14 on June 17th. June 17th was 14, right? And then July 14th was extreme fear of 23. So on June 17th, it was 14 extreme fear. July 14th, it was a 23 extreme fear, right? So at the low right there, I just seen all this just now. Y'all watching this in real time. I just happen to be talking about this. So at the same low that I was talking about up until where we at now, when I said the rubber band stretched out really far, from there, it was a 20, what I said it was, 23 and 14. So this right here was, let's see, this is 25. So let's just say right there. Just say right there. We was like right there on the 14th, right? And that's 25, 5, 10, 15, 20, 25. So 5, 10, 15 back off. So on that June low, we was right here. Just say cutting across where that E is on extreme, right? On the July low, we was like, that's 5, 10, 15, 20, 1, 2, 3. So right here somewhere. Just say we was right, but we was in extreme fear, right? Now that the rubber band is stretched all to Hades, I can't hold it no more. I can't hold it no more. That's where it's stretched out. But look, when we get into greed, and them boys be feeling like they done missed something. Oh my goodness. The rubber band gonna stretch even more, man. It's gonna stretch even more. Again, the market can stay irrational longer than you can stay solvent. And mind you now, what's gonna happen when, now dig it. Let's look at this right here. Let's pop on the volume real quick before I leave, right? Look at the volume over here as it's coming down, right? The volume coming down. So imagine when the people that was short in the market over here, imagine when they just give up. Imagine when they just give up. Ping out. Ping out. That's going to be a ping out before we come back down. Imagine when they just give up, when they say, man, I can't take it no more. And they just give up. That's automatic buy stops. Automatic buy stops. That's automatic buy stops. That's other people buying too. Ping out. That's another reason to go up, man. Let the market show you what you. That's why I say right now ain't the time to jump into no calls, swinging no calls. Right now ain't the time to jump into no puts, man. I said all that to say that again. This ain't the time to jump into no calls. This ain't the time to jump into no puts. Right? If you missed the move, you missed the move. And don't predict the next one. Let the market show you what it's gonna do. I appreciate you, Sonia. I appreciate you, Sonia. Sell the swing calls once it gets to 80. Once it get to 80, talk about the fear and greed, the fear and greed index over here. Man, if it get over there, if it get over here and you still holding calls, you gonna be holding a bag in a minute. You're gonna be holding a bag in a minute. Hey, man, I appreciate y'all for hanging out with the old man for 56 minutes. Again, I'm not gonna be on here. I'm not gonna be on here tonight. I'm going to my son's game. I was trying to close that out. It ain't let me close that. I'm going to my son's game. I appreciate y'all for tapping in tonight. We'll jump on Sunday afternoon. Oh, this Saturday, I share a link. The link not gonna stay public, but I share the link for the final installment of Discipline Over Dollars at the library. It's part 3 at the library. I'm gonna be focusing on trading. It's gonna be technical analysis and trading. I'm gonna try to like simplify it. So, because I only got an hour to talk, so I'm gonna try to simplify it. I'm figuring out my plan of approach on how I want to do it, because it's so much to put into one class about reading charts, trying to find a setup. It's so much to put in there. I'm gonna try to simplify it as much as I can and still give something of value. But I'm gonna share the link for the cousins that's not in Columbus, Georgia. If you're in Columbus, Georgia, or close to Columbus, Georgia, pull up to what's the address at the library? Is it 3000 Macon Road? I think it's 3000 Macon Road. Let me check the area. But pull up to the Columbus Library. Y'all know I can't talk and chew gum at the same time. Library. Chattahoochee Valley Library. What is it? Chattahoochee Valley Libraries. Jeez Christ. Pulling up everything except what I want. Okay. Yeah, 3000 Macon Road. 3000 Macon Road. Y'all pull up. Right there. This one right here. That's where it's gonna be. 3000 Macon Road, Columbus, Georgia. At the public library inside the auditorium at 11 o'clock this Saturday. I'll share a link on my IG story for the cousins that don't live in the area. But if you're in the area, if you're in the surrounding area, pull up on your boy. Hang out with me for an hour this Saturday. If not, I see y'all Sunday at 3 o'clock, and we'll talk about what we want to see for next week. We'll look at the week, see how the week ended, and see what's the potential moves for next week. Until Sunday, y'all be safe out here, man, in these monkeypox filled streets, man. Gone. Yep.